All right. Hey, everybody, welcome back. We love to take these deep dives, and today is no different.
Absolutely.
We're going to be looking at annuities,
Okay.
and more specifically, the Oxford Life Multi-Select Fixed Annuity.
Interesting.
We've got some material here from Diversified Insurance Brokers.
Right.
So, if you're looking for some income during retirement,
Right.
you want to protect your savings,
For sure.
maybe keep the tax man away a little bit.
Hopefully.
We're going to see if this fits the bill, right?
Yeah, let's take a look.
So before we get into the nitty-gritty, just in case somebody out there isn't familiar with what an annuity is,
Right.
what is it?
Yeah, so an annuity in the most basic sense is basically a contract with an insurance company
Okay.
where you pay them a lump sum of money up front, and then in return for that, they will guarantee you a stream of income payments later in life.
Okay, so it's kind of like a pension in a way.
It is very similar to a pension, yeah.
But you're setting it up yourself.
Yeah,
Yeah.
exactly. You're basically creating your own personal pension plan.
Okay, cool. I like that.
Yeah.
All right, so this Oxford Life Multi-Select Fixed Annuity, it offers these guaranteed interest rates
Yes,
for like 3 to 10 years.
that's right.
What is the big selling point there?
Well, the stock market can be really volatile and unpredictable,
Oh, absolutely.
especially as you get closer to retirement.
Yeah.
So the appeal here is that you're getting a fixed rate,
Oh,
which means you know exactly what your return will be year after year.
so you can really plan around that.
You can plan around it. You have that stability. You have that predictability.
That's got to be a big relief for people who are, getting close to retirement and don't want to be messing around with the stock market.
Exactly. It offers that peace of mind that a lot of people are looking for.
Yeah, I mean, the material really emphasizes this protection from volatility.
Yes.
Why is that such a key benefit?
It really comes down to risk tolerance,
Okay.
Some people are very comfortable with risk. They're happy to ride the ups and downs of the market.
They want to hit that home run?
Yeah, exactly. But for others, especially as they approach retirement, they become much more risk averse.
Makes sense.
They want to know that their principal is safe and that it's going to grow steadily regardless of what's happening in the market.
Okay, so you've got that kind of guaranteed growth. You've got the protection from volatility.
Yeah.
How about taxes?
Ah, yes, taxes.
Always got to think about those, right?
Always got to think about taxes. This annuity offers tax-deferred accumulation.
Tax-deferred accumulation.
Yeah.
So what is that exactly?
Basically, it means that the money you earn within the annuity grows without being taxed immediately.
Okay.
So you only pay taxes on that money when you start taking withdrawals, usually during retirement.
So you can kind of let it grow and grow and grow without having to worry about paying taxes on it every year.
Exactly. And that can make a really big difference in the long run. Compounding is a powerful force.
So potentially then you'd end up with a much bigger nest egg on the line.
Potentially, yes, because you're allowing that money to grow untaxed for a longer period of time.
But what if you need to access that money before retirement?
Right.
Like what if something comes up, life happens?
Life does happen, and that's why this annuity has a feature that allows you to withdraw up to 10% of your account value each year without any penalty.
Oh, that's nice.
So it gives you some flexibility.
Yeah, you're not totally locked in.
They're not totally locked in. You have some access to your funds if you need them.
They also mentioned waiving withdrawal charges if you have certain medical situations,
Yes, that's a very important feature to consider.
like a terminal illness or if you need long-term care.
Right, exactly.
That seems like a pretty good safety net.
It is. It's a safety net designed to help you access your savings when you need them most without being penalized.
Makes a lot of sense. But what if you need more than that 10%? Like, are there big penalties?
Well, if you withdraw more than the allowed 10%, you might have to pay what are called surrender charges.
Okay.
These are basically fees for early withdrawal.
So you really want to avoid doing that if you can.
Yeah, ideally you want to plan your withdrawals carefully and try to stay within that 10% limit.
Got it. Now, you pick a term for this annuity, like we said, 3 to 10 years.
Right.
What happens when you get to the end of that term?
Well, at the end of the term, you have a few options.
Okay.
You can renew the annuity for another term at the current interest rate being offered.
Okay.
You could choose to annuitize it, which means you start receiving regular income payments.
You start getting those pension-like payments.
Exactly. You start getting those guaranteed payments for a set period of time or even for the rest of your life.
And I imagine you can also just cash out if you want to.
You can withdraw your entire accumulated value without penalty at the end of the term.
So you got some choices.
You do have choices, and it's important to remember that if you don't actively choose one of those options, the annuity might automatically renew.
Oh, really?
Yeah. So it's important to stay informed about those renewal conditions and make sure you're making an active decision about what you want to do with your money.
That's a good point. We were talking about, passing away before the term ends. What about this death benefit that they mentioned?
Yeah, the death benefit is basically a guarantee that if you pass away while the annuity is still active, your beneficiaries will receive the full value of the contract.
Okay, so your money isn't just gone.
It's not gone. It passes on to your loved ones.
So that could be really helpful for estate planning purposes.
It can be a valuable tool for estate planning. It ensures that your heirs are protected financially, even if something unexpected happens to you.
Makes sense. Last thing they talk about this, Oxford Life, the company behind this annuity.
Right.
They talk a lot about their reputation and their history.
Yes.
Why is that important?
Well, when you're talking about retirement savings, you're talking about a long-term commitment.
Yeah, this is your future we're talking about.
Exactly. So you want to make sure you're working with a company that you trust, a company with a solid track record of stability and responsible management.
You don't want them disappearing overnight.
You don't want them disappearing. You want to feel confident that they'll be around to fulfill their promises down the line.
So peace of mind is a big factor here.
Absolutely. Peace of mind is essential when it comes to your financial future.
Okay, so we've covered a lot. We talked about this guaranteed growth, the potential tax advantages, the flexibility, the death benefit. Sounds pretty good. But this is just one specific annuity.
It is just one specific annuity. There are many other types of annuities out there.
So what's the big takeaway here for our listeners?
The big takeaway is that annuities can be a valuable tool for retirement planning.
Okay.
But it's important to do your research and understand how they work and how they might fit into your overall financial plan.
So you really got to look at your individual needs and goals.
Exactly. You have to consider your own risk tolerance,
Yeah.
your income needs, your time horizon, and then decide if an annuity, and if so, which type of annuity is right for you.
Great advice. Thank you so much for taking this deep dive with us into the Oxford Life Multi-Selects Fixed Annuity.
My pleasure. Thanks for having me.
Hopefully everybody out there learned something. And yeah, we'll see you next time.
See you next time.
Bye.